The federal public comment period is now open on Wisconsin's reinsurance proposal. We're talking about something that started back in January of this year. Governor Walker introduced what he called the Healthcare Stability Plan. A big component of that plan was to ask the Fed's permission to waive part of the Affordable Care Act through a 1332 Innovation Waiver that would allow Wisconsin to establish a state reinsurance program. Through that program, they hope to follow the example of other states like Minnesota and Alaska, set up a state reinsurance program that ultimately could bring down premiums in the insurance marketplace. It subsidizes insurers for very costly enrollees, thereby passing on the savings and bringing costs down. Generally, reinsurance has been seen as a really successful idea. It was part of the original Affordable Care Act. It was a way to help stabilize the marketplace when there was an influx of newly insured people for the first time and to help balance the risk. It was part of a multi-pronged approach to make sure that you could bring people to the marketplace, offer them affordable coverage, and spread the risk around a little bit to make sure that some markets weren't being inundated with a very sick risk pool while others might be relatively healthy. Wisconsin has asked the US Treasury and Department of Health and Human Services permission. They submitted a waiver request the way that they're supposed to and that other states have. They followed this example of Minnesota by structuring their innovation by saying we're going to set up a state program. They're calling it the Wisconsin Healthcare Stability Plan. It's going to have an attachment point, a point at which some folks are very expensive, and set a reinsurance cap. So folks that are over $50,000 in their claims, that those insurers can be reimbursed by this healthcare stability plan up to a certain dollar amount, $250,000, to help defray that cost and that hit to that plan, thereby passing on the insurance savings to the consumer. There's been a lot of talk in the state of Wisconsin after the state public comment period closed about how successful this model could work. Now, people across the board have been saying generally reinsurance is a good idea. It was part of the original plan. It has been successful in other states such as Minnesota. The way Wisconsin's waiver was written, however, raised some concerns. There was no guarantee that savings would be passed on to consumers. There needed to be a stronger consumer protection language. There were concerns about funding mechanisms for how this would happen, and then a lack of a guarantee that in the context of everything that's happening nationally in the stability of the marketplace, that this would have any impact at all. And we'll talk about that in a little bit more detail in just a little bit. Now, we've come to you and talked about reinsurance already in the past. We're talking to you today because we're at a new stage of this reinsurance proposal. On May 9th, the Department of Health and Human Services and US Treasury deemed the Wisconsin application, the request for a reinsurance state plan waiver, complete. What this means is the feds have received everything they need from the state, an application with the waiver request in it, examples of the state law that have already been implemented and signed by Governor Walker, and the public comments that were submitted during the state's public comment period. The feds don't need anything else from the state, so they are now in the process of getting comments themselves. We are now in the federal public comment period. This is open until June 8th. The department then will approve or deny Wisconsin's request. They have 180 days to do this. So folks are encouraged, and we'll show you the email address and the way you can do this in just a moment, to share their feedback. How can Wisconsin's waiver be improved? What additional strength could be added? What are the weaknesses of plans? What are your criticisms, critiques, or endorsements of the waiver request? Now, the timing, as we've talked about before, of this whole process seems a little curious. You'll remember Wisconsin's Governor Scott Walker was very critical of the Affordable Care Act. Wisconsin has just joined another lawsuit saying that the Affordable Care Act is not constitutional. So we continue as a state to try to separate ourselves from the mandates and the consumer protections of the Affordable Care Act. But at the same time, this was just introduced to help stabilize the Affordable Care Act. So there's a curious pivot. And one of the talking points that has come out a lot of health policy experts has been that healthcare is a voting issue. We are in an election year and we have a governor that is up for re-election. So looking at that and this waiver request timeline together, you can put two facts together. The feds have 180 days after the public comment period closes to weigh in, approve, or deny Wisconsin's federal waiver request. They've been approving a lot of waiver requests, and this is one that's similar enough to other states that this might be seen as one that might be very quickly approved. Now, that puts us at early November for an approval or denial. So we're expecting to hear from the Departments of Health and Human Services and Treasury right before the election. This appears to be a very politically strategic timeline to have the governor have a success on something that's very popular in the state, securing healthcare and stabilizing the marketplace. So here are a few concerns. Consumer protections, like we said, there are no requirements in Wisconsin's waiver request that insurers pass on their savings to consumers. They could take a reinsurance payment from the Wisconsin Healthcare Stability Plan, and they could just keep it and keep increasing rates, saying there are other market demands that require that we increase our premiums this year. So that's a big concern, because we're looking at a marketplace, as we mentioned, if you look in the context of everything else that's going on in our marketplace, short-term insurance, association health plans, GOP tax bill that says there's no penalty for being uninsured, strategies to keep transitional health plans that pull healthy people out of the compliant marketplace. So we have a lot of pressures on our marketplace that make it less stable and cause premiums to increase. So there's no guarantee and there's no language passing on savings to consumers in the context of everything that's driving up premiums. Funding mechanisms could be a problem. The state is asking the feds to support the majority of the costs. This is pass-through savings that might not be used for things like advanced premium tax credits that could then instead be used for reinsurance. It's just taking one pot of federal money and shifting it over for another purpose. If premiums are going up, we're going to need that advanced premium tax credit money, and therefore there won't be the federal money available to help fund the federal portion of this plan. But it also allows the state to throw in at least $50 million, maybe $30 to $50 million, but the language of the reinsurance proposal says the state could carry more if it needed to. To fund the state's portion, the language of the reinsurance plan says we're going to take it out of general purpose revenue. To get general purpose revenue for the state of Wisconsin, they suggest we could use Medicaid lapse savings in the Medicaid program to help fund the reinsurance plan. There could be, and we've talked about this before as well, a perverse incentive to keep people from Medicaid to generate a Medicaid lapse to then fund the reinsurance program. That is very troublesome. This is a regressive policy that could be seen as harming the lowest income to benefit folks traditionally around 400% of the federal poverty level and higher. So taking money out of the low-income programs to give it to a little bit higher income could be a huge concern and something that has not been addressed in the Wisconsin's proposal or in the revised proposal to the feds. So state money could be coming from Medicaid lapse funding, a big funding concern. Not being talked about a whole lot is the broad delegation of authority that the proposal, the reinsurance plan, gives to the Wisconsin Commissioner of Insurance. They get rulemaking authority to create any rules they need using what's called emergency rulemaking procedure without having to follow the rules of emergency rulemaking procedure. So saying you can designate it as an emergency, that you have to create policy to make the reinsurance plan work, and you don't have to follow the rules of designating something as an emergency, which just means the Commissioner of Insurance can write the rules he needs when he needs them. This could impact funding amounts. This could impact premium and consumer protection amounts. It could be quite extensive. So that's a very broad delegation of authority of things that should traditionally be done in the legislature. It's crossing the branches of government, and it's written right into Act 138, the law signed by Governor Walker that makes reinsurance possible. Finally, just as an aside, the Act 138, the reinsurance plan, prohibits Medicaid expansion from coming into Wisconsin. So a general concern and something that they wrote right into the reinsurance bill. More is just a political statement, not because it's really going to impact what's happening with the reinsurance plan itself. Now, curiously, Medicaid expansion could help fund the Medicaid program, thereby creating the Medicaid lapse that this program might need to succeed. So it might actually, in the alternative, a Medicaid expansion could actually really help build a much stronger, much more stable, and much well-funded reinsurance program. But the opposite was written into this legislation. Finally, damage to the market from other policy changes like we talked about, short-term insurance, association health plans, getting rid of the penalty for being uninsured, transitional health plans being allowed one more through 2019 in Wisconsin. All things that health policy experts are telling us will drive up premiums are supposed to happen at the same time as the governor is trying to make guarantees that premiums will decrease because of reinsurance. That's some of our thoughts. You have the ability to share your thoughts. Like we said, the federal comment period is open until June 8th. You can send a simple email to the email address that we have displayed on the slide, state innovation waivers at cms.hhs.gov. In the subject line, include Wisconsin Section 1332 waiver comments. That phrase will make sure that your comments get directed to the right person to be combined with the other comments specific for Wisconsin's waiver request. If you can get it exact, please do so. If you get it close, it's more important that you submit your comments than that you get all of these items specifically correct. Try to get it as close as you can. Try to make sure you have Wisconsin's Section 1332 waiver comment in your email heading. Include your name. If you work for an organization and you're commenting on behalf of the organization, include that in the email. Include your email address so they can tie it back to a real person and not disregard it thinking it's just an automated bot or something. So make sure you include your name, organization if you have it, and a way to contact you, your email, your phone, your mailing address. And in the body of an email, you can type up your comments. You can also attach a document, a Word or a PDF document that spells out some of your comments, your concerns, your endorsements, etc. But do it before June 8th. You can read the waiver as it was submitted to the feds. You can read it on the OCI's website, Wisconsin's Commission of Insurance website. You can read Act 138, the state law that says if the feds approve this, this is what's going to happen. And you can also read the letter that the Centers for Medicare and Medicaid Services sent back to the state of Wisconsin saying that their waiver was complete, which means the federal comment period opens. So these are the documents you can review if you want a refresher of what we're talking about in detail and the process as it's outlined. You can certainly send your thoughts to us as well. You can send us an email, you can visit us online, and you can share your thoughts or your story. And you can do all of that at healthwatchwisconsin.org.